Hello and welcome to episode 10 of the Essential Six, our regular RSM update on the world economy. I'm joined by Joe Brusuelas, Chief Economist, RSM. Hello, Joe. How are you?
Hi, Simon. Good to talk to you again.
Excellent. Joe, we're recording this at the tail end of August 2021. So there's three things I just wanted to cover off with you in this session. The first one is around global growth projections. And actually, there's been a bit of a dampening down in terms of some of those expectations. What's that down to? Is that because we went too soon, too early, too optimistically?
No, it's because the rise of the Delta variant and its impact, especially in Northeast and Southeast Asia, where we have most of the modern manufacturing platforms and we have a good amount of trade and shipping flows through those ports. So things are slowing. Take a look at the IMF. They're still expecting a robust, above 6% rate of growth on average throughout the year. But my sense is that's going to come down a bit, probably into the mid fives. I've already marked down my US GDP growth forecast twice this year, mostly due to the Delta variant. So that's really what we're dealing with here. We all hope that it's the last wave of the pandemic. But when you look at the global economy, specifically, there are places like Vietnam, they're just experiencing their first wave, right? So
Yeah.
we'll have to see how the global health crisis evolves in order to more accurately ascertain the direction of the global economy, moreover, the pace and magnitude of growth.
I mean, we're hearing in the UK a lot about the Delta variant running rife in the United States at the moment. Is that actually happening? Is that just media sensationalism?
Well, it's happening, but it's happening in a very specific location, essentially from in the southern or southeastern portion of the United States, say from East Georgia to West Texas. There's an arc of instability that's developed. It has largely to do with the unvaccinated population. For a lot of reasons here in the United States, a good 20 to 30% of the population refuses to get the vaccination. So we're paying a price for that now. And the public is pulled back a bit on travel, a bit on dining out, and a bit on spending. So we're not having that, 8 to 10% rate of growth we wanted. It's going to be closer to 6 to 7%.
And in the UK, looking at your growth projections for the UK and actually continental Europe or the EU area of Europe, how much are you scaling that back from your previous estimations?
We've only scaled it back modestly. We're still looking at a good, strong 6.5 to 7% rate of growth in the UK. The UK, it looks to me like the Delta variant has peaked in the UK and it's easing somewhat. I have noticed that there still is an appetite to travel amongst UK citizens, and we're observing some good things. But it's not quite going to be the rate of growth we might have thought about 4 to 6 months ago.
Well, we are certainly, Joe, we're certainly keen on traveling. We're waiting for the Biden administration to open the doors for UK nationals. We're not quite there yet, and clearly that has an impact on transatlantic trade. So I guess we're just going to have to wait and see how that one plays out. But if I'm being pessimistic in my own view, we're probably not looking at much movement this side of Christmas.
Well, it does appear that the global travel that we all were anticipating opening back up just simply isn't going to do that this summer or in the early fall. And I think you're right. Late fall into early winter appears to be the earliest time in which we're going to see global business travel begin to move again. And it's important. And we've talked about this, that until we get vaccinations distributed on a global basis, we're just not going to revert back to the pre-pandemic global level of economic activity.
Yeah. Final question, just as time's running out, Joe. There was some concern last week that the US Federal Reserve was going to potentially ease its asset purchase program. I'm just keen if you could just briefly explain, well, what is that and what's the impact that might have for a UK business?
Sure, the Federal Reserve purchases $120 billion in assets a month, 80 billion in treasuries and 40 billion in mortgage-backed securities. What that does is that bolsters financial conditions in the United States and indeed all over the world. Well, the US economy is now adding somewhere between 650 and 700,000 jobs a month. The US economy has actually moved above the pre-pandemic level of economic activity. So it's natural that some of the monetary accommodation that was put on the table during the worst portions of the crisis begins to be pulled back. Now, what that means is the accommodation is easing. The accommodation is not being withdrawn. So it shouldn't have that much of an effect on your average UK business person. Where those impacts may be a little bit more pronounced is in the emerging markets, where there's an idea that, well, if the Fed's easing, eventually they're going to begin to hike rates. Okay, that's true, but we don't expect those rate hikes to begin until 2023 at the earliest. So I think, so we don't dance on the head of a pin here. We're just easing the pace of monetary accommodation. We're not withdrawing it. Tapering is not tightening, and I think that's the main takeaway.
That's a really good distinction there. Tapering is not tightening. Okay, Joe, thanks very much for your insights. Again, fantastic as ever, and we'll catch you next time on the Essential Six. Goodbye all.